Hi there, this is Christian Dye and from Latitude West Financial. Thank you so much for joining us today for Cryptocurrency 101. Today, my special guest is James Rooney. He's a client of mine, and I guess the best way to call him is a professional cryptocurrency investor. He got his law degree from the UK, and then he's got his MBA from here at the Sauder School of Business, the same school that I came from. We missed each other by a couple of years, though. And James is going to be fielding a series of questions by me to get a better understanding for my clients and guests on cryptocurrency. What's going on? Should we be paying attention? Should we be getting involved? And if you're already in the space, what to do next? James, tell me a little bit over here. We want to dive right into it, but just tell me really quickly, when was it and what made you made the shift into becoming a professional investor as opposed to a lawyer, or I believe you were a consultant at one point.
Good morning, everybody. I hope you enjoy the presentation today. So to answer Christian's question, I did my MBA at UBC, and about halfway through the program, one of my classmates who ultimately went on to work in finance as an investor with Goldman Sachs, and has now actually gone back to Bitcoin full-time himself as well. He wrote a paper for one of his finance projects on Bitcoin, and most people dismissed it as being a bit ridiculous. Luckily, I read the paper and took an interest in it from that point. Shortly after reading the paper, I bought a little bit of Bitcoin. Didn't really think about it too much then afterwards. Sort of over time, watched it appreciate in value, watched the community and the network grow. And then sort of roughly summer of 2016, I realized that it's going to be significant in the future and it wasn't going anywhere. So I started to work part-time on it in terms of learning about different projects to invest in outside of Bitcoin. And then in February of 2017, the market began to tick up again more significantly than it had done in the recent past. And so I was working with a startup in London at the time, wasn't particularly enjoying it, and decided that I may as well give it a shot with crypto. I didn't have any sort of significant obligations, financial or otherwise, and so I thought I'd give it a shot. And I've been full-time in crypto since then, February 2017, and haven't regretted it for a second. Absolutely loved
Yeah,
it.
definitely not. Yeah, I know you haven't regretted it because when you hear these stories of these, Bitcoin multimillionaires, essentially we've got one with us today. Not going into too many details over there, but so I think your value is incredibly, incredibly insightful for today's session over here. I thought it'd be fun to show this one over here, the valuation of Bitcoin, especially if we're a little bit new to the space over here. If you invested $10,000 in Bitcoin last month, you'd have about 10,300 today. If you invested 10,000 last year, you'd have about $84,000 from a $10,000 investment 1 year ago today. If you invested 5 years ago, which is 2016, you would have about 1.3 million off of your 10,000 investment. And if you invested 10 years ago today, almost to the date in April of 2011, you would have 609,700,000. So just to give you a quick little evaluation of why we might need to be paying attention to this new value of currency over here. Here at Latitude West, we know that I am not all a stock guy. I love the diversification. And for those of you who are my clients, you know that I love real estate. And other forms of assets. And I like to take opportunities whenever there is a downturn or an opportunity in the market, whether it be in the stock market, the real estate market, or possibly in cryptocurrency market. So what I want to do is I want to try to understand this a little bit better from James's perspective, because he's the expert here. So I have a series of questions over here, James, and you just go through them one at a time. So let's start with, especially if there's somebody new here, what exactly is Bitcoin?
So probably the best and most concise explanation of Bitcoin that I've heard is that it's a non-sovereign, hard cap supply, global, immutable, decentralized digital store of value that has a completely open ledger. So to kind of break that down a little bit, it's a bit of a mouthful. Non-sovereign in that it's a store of value or currency which doesn't belong to any specific nation state. Hard cap supply in that there'll only ever be 21 million Bitcoin. Global in that it's accessible from anywhere in the world. There's no barriers to people accessing it or owning it. Immutable in that once a transaction has been completed on the Bitcoin blockchain, it's permanent and can never be changed. Decentralized in that it's run by nodes, or should I say verified by nodes and run by miners all over the world. Store of value in that certainly in sort of fiat currency terms, by fiat I mean government currency terms, it's only really increased in value since its inception. And open ledger in that a blockchain is really just an accounting ledger, which is maintained by both node operators and also miners. And although it's synonymous in that you can't see the individual who owns Bitcoin, you don't, for example, I own Bitcoin, you know that I have an address which owns a certain amount of Bitcoin. And so it's possible to see all the different addresses which own Bitcoin and how much each particular address has access to. So in terms of describing its value, part of the reason it's valuable is for the reasons I've just mentioned, but also because of really just simple supply and demand dynamics. Bitcoin is perhaps the only asset ever whose supply is entirely unaffected by its demand. In that, no matter how popular it becomes, no matter how many people want to buy it, the inflation schedule is fixed, and in 2179 no more Bitcoin will ever be produced, and you know exactly that every 4 years the number of Bitcoin produced on each block is halved. So again, no matter how popular it becomes, the supply is always decreasing. But I mean, that's just part of the reason. Really, you'll have to sort of think about the fact that there's just a lot of technical, creative, and financial talent coming into the space now. There's a ever increasing diversity of people who hold Bitcoin, or as the sort of saying goes in Bitcoin, that these sort of the hodlers. Initially, it was quite a small group of fairly small group of people who owned almost all the Bitcoin, because they were mining at the very beginning. You've now got an increase in the number of influential people who hold Bitcoin as well. And as important as anything else, over time, the network security, in other words, the hash power required to produce new blocks by miners, has increased exponentially over time as well, meaning that it's probably the most secure computer network in the world. And I mean, ultimately, as it's a form of money, and money is really just technology, Bitcoin is just better technology than gold and seashells or even fiat currency. And so for all those reasons, it has value. And that's really just why it's increased in value over the years. In terms of why it fluctuates so much, I mean, that's really just a function of money supply in the real economy, to be honest. I mean, it's particularly been the case over the past few years, whereby global money supply has increased significantly, mostly due to COVID, but also for a few other reasons. But I mean, the way I like to think of it is I like to denominate my financial existence in Bitcoin terms as opposed to in fiat currency terms. And in Bitcoin terms, it doesn't fluctuate, it's not volatile, it's completely fixed. But education's become cheaper in Bitcoin terms, houses have become cheaper in Bitcoin terms. So again, to me, it doesn't fluctuate, and I would suggest that if you do sort of take a greater interest in Bitcoin over time, start to think about the value of things in Bitcoin as opposed to in Canadian dollars, for example. Can it devalue to zero? Sure, it's possible, but one of the strengths of Bitcoin is its network effects, and in particular, the people who own Bitcoin. And there are those who say that Bitcoin is almost like a new religion. And the people who were the earliest evangelists of Bitcoin are such that I can't really see very much that would shake their belief and desire, such that Bitcoin would actually devalue. And I'm ultimately, for something to devalue to zero, there just can be no more buyers at any price. But with the original sort of crypto investors, a lot of them now are very wealthy, not just in terms of crypto wealth, but also fiat wealth as well. I mean, they have sort of spent their crypto on things they need to live on, like houses, cars, and maybe diversified a little bit. And so I think even between themselves, they create a marketplace for Bitcoin such that it'll always have some value. I think the only thing that could maybe fundamentally shake their beliefs so that it could possibly go to zero is Satoshi, him or herself or themselves appear and, you know, make some sort of comment about how Bitcoin is no longer what they imagined it to be, and do their utmost to try and sort of dismiss its current value. But even then, things often evolve for the better from the original creation. And I would say that this is perhaps the case in Bitcoin with Bitcoin as well. Bitcoin is not the same as it was when Satoshi wrote the white paper. I would say it's improved in a variety of different ways over time. And so again, for those reasons, it's possible it could go to zero, but pretty unlikely. And
Yeah.
then finally, deregulation, I think is something that people are probably a little worried about. Various countries, Turkey recently has proposed, well, not proposed, is implementing a ban on Bitcoin or cryptocurrencies generally from a few weeks' time. India kind of flirts with the idea, as does China from time to time. I mean, it's really just regulatory arbitrage is the answer to that question. Countries can come and go in terms of how they, might decide to ban Bitcoin or cryptocurrencies, but because it's global and it's distributed, and again now a lot of crypto people are pretty wealthy and mobile. If one country bans it, they can easily relocate to another country. Bitcoin can be protected and mined from anywhere in the world. It's sort of location agnostic. It doesn't need to be near any particularly large population centers. So, I mean, I would ultimately say that it's not really in most governments' best interests to ban Bitcoin. The innovation coming from Bitcoin, specifically in cryptocurrencies more broadly, is so significant that if nothing else, the tax revenue to be gained from allowing Bitcoin and cryptocurrencies to flourish is such that it would be madness for governments to ban Bitcoin or regulate it into existence.
Oh, this is a great piece of insight. I'm loving how much I'm learning myself over here. What I wanted to do is kind of, sort of give what's out there, and the ideas behind it, and kind of, help people to see some perspective over here. I guess the reason why a lot of us are even on this call is because I think a lot of us are very confused. And for example, you've got the very, very large names out there that are for, and those are against. And when you have that many large names, like Elon Musk, he is, a pro Bitcoin. He has taken a $1.6 billion of Tesla money and invested in Bitcoin. You've got Kathy Wood, for those of you who don't know, from ARK Investing. A lot of people, she got a spotlight this last year because she made big bets on Tesla, big bets on other stocks, and they've come in very, very strong. So now she's basically, on YouTube or on Yahoo Finance almost every other week, and she's very, very heavy pro Bitcoin. Then you've got Warren Buffett, the Oracle of Omaha, who's very anti-Bitcoin. You got Michael Berry from the movie The Big Short. He's also anti-Bitcoin. So when you kind of have these very, very large players over here for and against, it can get very, very confusing. I guess for me personally, and I thought I would throw this disclaimer out before I forget over here, this session is not to promote the buying of any cryptocurrency. And by all means, this session is not financial advice. This session is an educational piece that I'm giving in order to help people understand it if they want to learn more. But by all means, you need to do more learning on yourself or involve your advisors to talk more about this. But what I want to do over here is kind of give my spin on it And by all means, James, jump in whenever you want. So when I think of the history of currency as well, I kind of think of fiat currency, or the origins of it. So I take the US dollar, for example. Now, in the 70s, it was taken off the gold standard. So what that means is that it wasn't actually backed by anything. It literally was the value of just the paper itself, as a form of an exchange of a promissory note to exchange goods. Um, Gold itself has an intrinsic value over here. But the reason why the American dollar continues to not be worth just the paper that it's printed on is because we have a faith, the Canadian dollar, the US dollar, we have a faith that someone else in the future, and it could be later that day or it could be in 10 years from now, will take that as a form of exchange because it has a value into it beyond its intrinsic value of the paper itself. Now, I take the Zimbabwean note, the $1 Zimbabwean note, and I actually have a couple of Zimbabwean notes because I used to live in Zimbabwe when I volunteered. But their currency, of course, devalued in the late 90s. But they went through something called hyperinflation, where its value pretty much, the dollar's value pretty much went to zero because they ended up printing a $20 billion note, which of course was probably worth to around $20 of actual money. So when I think of the value of currency, and I think, well, why does Bitcoin have any value at all? It's because its ability that someone else is willing to exchange for it at a later time. And I think the one question you kind of glanced over, James, was the why is it worth so much more than it was 5 years ago? I feel that my answer would be because now there's institutions investing in this. There's a lot more people as compared to 5 years ago. And because of that, do I feel confidence that someone else might be willing to pay for this in the future? Me personally, I do, and that's why I'm paying attention. Uh, and when I think of this as when you sort of described it, most people have used the term Bitcoin is a store of value. It's something I'm putting my money in, I'm storing its value, and then I'm pulling it back out later. I kind of look at these three stores of value to help people understand it. So I start with the Michael Jordan rookie card, specifically by Fleer. This is, if it was in mint condition and the PSA 10 and all of those other things, this card over here, when it was very, very, very first issued in 1986, was not worth very much. It was probably worth maybe, 50 cents or 20 cents. And back then, if you would have gotten this, I kind of almost think of it like a Bitcoin. It wasn't worth a lot because not a lot of people were paying attention to it. Not a lot of people saw its value in it. But 10 years ago, 10 years later, Michael Jordan, of course, is winning championships. 10 more years later, he's retired, greatest basketball player of all time. This card today is worth about $40,000. However, if you catch it in absolute perfect mint condition, PSA 10, and all of those conditions, it's actually worth $450,000. So if you found one and somebody said, "Hey, I've got a Michael Jordan card and it's in really good condition and we could get it verified and I'm willing to sell it to you for $20,000." You might think to yourself, "I'm not going to pay $20,000 for a card because it's just a card, right? Its intrinsic value is just a piece of paper." But that would be a smoking good deal. If somebody tried to sell you a Bitcoin today for $10,000 for one coin, you would say, "I'll take it. I'll take it." Because we now have a greater faith of its store of value. The next one that I look at over here is Da Vinci's painting of Salvador Mundi. Now, this one over here of the Christ, this is the most expensive painting in the world. It is $450 million US. But if someone said, you could buy this right now for $50 million. Well, why would I pay $50 million for a painting? But you would have that value that I know that at one time this value was much greater. And the last one I do is a house, real estate, my big favorite. If this home in Vancouver was $1 million and you could buy it for $600,000, you might be all over this. You might say that is the smoking good deal. But then people might say, well, what if the real estate keeps going down? But you would think, you know what? I have such great faith that this is going to go up. I'm willing to pay that. And of course, that's what we're doing in real estate now. We're essentially, especially if we're investing in real estate, we're just storing value in it, and then we plan on selling it at a later point. So when I think of Bitcoin, I personally think of it as a store of value. My faith in it has become more. I'm not going to say like a lot more, but more, just in the sense that I feel that other people will pay for my shares or my coin in the future. And I think that's for people who are still trying to get over the hurdle. Isn't this essentially worthless? Isn't this worth nothing? It's worth more because if you have the faith that other people are willing to pay for it in the future for a greater amount. So that's kind of my kind of spin on it, my educational spin. I'm going to shift back to you, James, with my next set of questions over here regarding different types of currency. So Bitcoin versus other currencies.
So, Bitcoin was the original. It's the one which I personally have the greatest exposure to within my portfolio. But I mean, it would be short-sighted to only focus on Bitcoin, both in terms of learning about cryptocurrency, but also investing in cryptocurrency. So outside of Bitcoin, obviously the next most famous one is Ethereum. Ethereum is really just a sort of decentralized global supercomputer, which enables smart contracts between several different people or multiple people to be able to execute things which you can't necessarily easily do in the real world. It's kind of, I think an analogy is that it's sort of oil to Bitcoin's gold. Um, so Ethereum is something which, again, I would advise people look into. It's something which I have a fairly decent level of exposure to. And then again, in each cycle, market cycle within cryptocurrencies, there are different sort of trends that happen. Many of all of the trends so far, or most of the trends so far, have been fairly fruitless. For example, back in 2017, you had the initial coin offering trend, which was largely full of scams and dishonest people trying to fleece investors who didn't know any better. This time around, we have something called decentralized finance, which to me is much more substantial and substantive. A lot of the projects have real value. I use a lot of the different protocols on a regular basis. So, I have a decent exposure to various different decentralized finance protocols. And then there's something else as well, which is fairly recent, which is called a stable coin. So with a stable coin, stable coins are fiat currency pegged. However, because they are blockchain based, they have more advantages than a regular fiat currency in that transactions are very quick. They're also very cheap, and anybody with access to a crypto wallet can send US dollar equivalent, Canadian dollar equivalent to anyone anywhere in the world, again for negligible amounts of money compared to sending money via money transfer in the regular financial system. Um, and then sort of specifically in terms of the investment utility of stablecoins, and because there's so much in demand relative to using fiat currencies, you can generate an extremely high yield on a bunch of different stablecoins without taking the sort of commensurate degree of risk. You might get 0.5% interest on your Canadian dollars in your bank account, but with stable coins, you can easily get 8, 9, 10% without even having to sort of fall too far down the rabbit hole to learn about what's actually going on. If you go a little bit further out the risk curve, you can earn much greater yields. And then within decentralized finance itself, decentralized finance really just being the creation of a new financial system that's openly accessible to anyone in the world with an internet connection, regardless of their background. At the most basic level, it just enables borrowing and lending. But then again, if you go further out the risk curve, it enables you to do sort of a lot more complex, exotic financial uh, enables you to sort of get involved with a lot more complex financial products than most people would normally have access to. So that's really what I'm involved with largely at the moment. In terms of advice about what you might want to be thinking about personally, at this stage of the market cycle, and also, if you haven't got the time to sort of dig deep into cryptocurrency, I would really just focus on Bitcoin and Ethereum. I would say that you'll get attractive enough returns with those two, and also, again, if you haven't got the time to dig into it, in a significant way, there's enough to learn just with Bitcoin and Ethereum to keep you busy. Um, if you did want to go a little bit further down the rabbit hole, look into decentralized finance, look into NFTs or non-fungible tokens. I haven't really got into non-fungible tokens too much myself, so I can't speak too much on that. But certainly in relation to decentralized finance, projects to pay attention to would be Aave, AAVE, Compound, Maker, and then Alpha Finance. The first three allow you to do the borrowing and lending, which I talked about before, only at much higher interest rates than what you might be accustomed to, certainly in relation to lending your cryptocurrency. And then Alpha Finance allows you to go a little bit further out the risk curve in terms of using slightly more exotic products. So yeah, I mean that would be my sort of thoughts and advice on what are the currencies to pay attention to, and certainly what projects to sort of think about.
Okay, what is DeFi?
Decentralized finance. So I mean, as I mentioned, it's basically the creation of a new financial system. It's openly accessible to anyone in the world with an internet connection. So it doesn't matter, your color, the color of your skin, your race, your belief set. There are a lot of barriers for people in different parts of the world accessing the financial systems in their countries. With decentralized finance, all you need is an internet connection and a cryptocurrency wallet, and you can use a lot of the same financial products within decentralized finance that you would be able to in the sort of real financial system, and oftentimes, again, for much less cost and also much quicker than you would be accustomed to. So it's essentially just a parallel financial system that's being created very quickly with an extremely high degree of innovation and talent coming into the space.
Got it. Got it. Tell me about stable coins.
So again, stable coins pegged to fiat currencies. They aren't subject to the fluctuations in value that Bitcoin and Ethereum are. Um, they are blockchain based, so they can be sent quickly, cheaply, and most stable coins at the moment are based on the Ethereum blockchain.
So, is a stable coin essentially something that we could invest in like a Bitcoin, but it's different than a Bitcoin?
Um, I wouldn't necessarily say you can invest in it per se. As I mentioned, it's really just a cryptocurrency token, which is pegged to the US dollar, the Canadian dollar, a variety of different fiat cryptocurrencies. The advantages of it are A, it's accessible to anybody. So again, as I mentioned, a lot of people around the world wouldn't easily be able to get access to US dollars for various reasons, whether it be through sanctions or because they just can't access a bank account, which enables them to get US dollars or even their own local currency. Um, again, that's not necessarily an advantage as an investment unless your currency is, in the case of the Zimbabwean dollar, or even the sort of Turkish lira at the moment, hyperinflating versus the US dollar, in which case you would want access to the US dollar to protect your own wealth. But within cryptocurrency, stable coins enable you to generate a fairly substantial yield. So, if you're thinking about portfolio construction within cryptocurrency, or even if you don't really want to sort of subject yourself to the volatility of Bitcoin, you can buy stable coins, Tether, for example, USDT or USDC, which is another US dollar pegged stable coin. You can either use a centralized authority like BlockFi or Celsius, deposit your stable coin with these institutions. They will pay you a very high interest rate, at least by conventional standards, sort of anywhere between 8 and 12%. Um, and um, and the reason they're able to pay such high interest rates is because there's a significant demand for those stable coins by speculators in the cryptocurrency market who will use those stable coins to go and buy other cryptocurrencies, which they believe will appreciate in value a lot more quickly than whatever kind of yield they might be able to get on those stable coins themselves. So again, I use stable coins to diversify my portfolio. I use them to generate yield. And again, in a market downturn, as we've experienced in the past, and we may well experience again soon, you can have almost entirely stable coins within your portfolio, and you could generate yield on your assets, your capital base of anywhere between 8 and 40, 50%, without being subject again to sort of price downturns in the underlying capital, and generate a very healthy income. But to get the very highest returns, I mean, you definitely have to go pretty far down the rabbit hole to learn about what it is that you're doing and understand the technology that you're using. But to be sort of safe, you can deposit Tether, USDC with BlockFi, with Celsius, and then there's a Canadian company called Ledn, LEDN, which also enables you to generate a fairly high degree of interest on your stable coins as well. It's a Toronto-based company. Pretty good. I'd recommend looking into them too.
Yeah, so just to make sure that I've got this clear over here, stablecoin would be a way of getting involved in crypto, but probably not have the large fluctuations that a Bitcoin or Ethereum might have.
Correct.
And
Correct.
and then the it was a ticker symbol that you were giving, is that correct?
It's not necessarily. It's not really a ticker. So you have USDT, which is Tether. So Tether is the company which holds the US dollars which back the stable coin. And then another one is USDC, and the company which holds those US dollars to back the stable coin is called Circle. So Circle is the one which is probably more aligned with, how do I say this? I wouldn't necessarily want to say legitimacy, but with Tether's been in the news a lot recently, over the past few years at least, because they are decentralized in the true sense of the word. They're one of the oldest crypto operators. They run an exchange called Bitfinex, which is one of the very first Bitcoin exchanges. They're not really sort of linked with the financial establishments in the way that the founder of Circle, USDC, is. So again, if you were to expose yourself to stable coins, USDC is probably safer than Tether, but Tether is older and is the original stable coin.
So if someone, let's say, was on a bit of investing on their own over here, you would find this as a ticker symbol inside your investment account. How would you invest in USDC?
Um, so probably the best way to get started, you take your Canadian dollars, and then you can go one of two routes. You either set up a Coinbase account. Obviously, I guess everybody now knows Coinbase. They went public a few days ago to a great fanfare. So I mean that's probably the sort of easiest and most safe way to do that. And then once you're on Coinbase, you can then convert your Canadian dollars to a sort of whole plethora of different cryptocurrencies, of which one would be USDC. And the other option is to set up an account with a company called Kraken, like Kraken, release the Kraken kind of thing. So they again allow you to buy cryptocurrencies with Canadian dollar. I think the stablecoin which they allow you to buy, or at least convert directly from Canadian dollars to Tether, is actually, well, to stablecoin, is USDT. And then you'd have to convert USDT into USDC via another exchange called Binance. I mean, ultimately, I can see how this can get quite complicated quite quickly. But to make it as simple as possible, just look into setting up an account with Coinbase and Kraken, and then go from there is probably the best way to start.
Sure, sure. And then what about this? What are the other currencies we should be paying attention to? I guess cryptocurrencies, we've got, there's so many out there, but which are some of the ones you're paying attention to now? The ones who are still kind of in that low cost?
So again, I mean, I mentioned I mentioned this at sort of the beginning of the talk on this slide. I mean, you have to be very careful in cryptocurrency. I mean, even obviously Bitcoin is volatile. Most people know that. Ethereum more so. But then as you go further out the spectrum into the less well-known cryptocurrencies, that they're very volatile, and a lot of them have already increased a lot in value over the past few years. All markets have cycles. Cryptocurrency is no exception. I think we're in the stage of the market cycle now where you just need to be careful in terms of diving into some of the less well-known cryptocurrencies, at least investing in them anyway. But in terms of actually learning about them, researching them, which I would absolutely support the idea of, look at Aave, AAVE, which is really just a decentralized money market. The user experience on that platform is phenomenal, fairly easy, allows borrowing and lending at fairly attractive rates. So for example, somebody in the Middle East, Africa, who might have a tough time getting a loan from a bank, but who has a lot of cryptocurrency, can go to Aave and they can deposit Ethereum, um, and they can get a loan against their Ethereum in the form of, again, those stable coins that I mentioned, Tether or USDC. And then with that Tether or USDC, they can hopefully, depending on where they live, buy real world assets with those stable coins, or convert them into a fiat currency which they can use or trade with somebody else. And then another one would be Compound. And then you've also got Maker and Alpha Finance as well. Alpha Finance is probably the most complex of the four. That's something which would require a bit more sort of a bit more of a deep dive. But I mean, there are just so many resources on cryptocurrency, many of which are free, some of which are paid for. There are lots of different ways to learn about it. I mean, if people are interested, message Christian, and he can message me, and then I can provide a bunch of resources for people to learn more. Again, both those which are free, and also which are paid for as well.
No, thank you, thank you. And so, I want to talk about the kind of people who came onto this webinar, just trying to figure out, hey, I kind of want to get some exposure over here. How do I get started over here? And I know there are some ETFs out there, and I guess the question is, should I go through and set up all of the Coinbase platform and try to buy a coin, or should I just throw a bit of money into an ETF that actually houses cryptocurrency, and it will go up or down with the valuation? What's your opinion, James, for somebody?
I think the answer is that you should do both. I think obviously that the benefits of setting up an ETF, and to kind of give you an idea, Canada is actually ahead of the US in this respect, in that the US doesn't have any Bitcoin or Ethereum ETFs approved yet. In Canada, there's Purpose Bitcoin ETF, which is the ticker BTCC. You can buy that in your TFSA or RSP. And then recently, a couple of days ago, actually, Purpose was also approved to create an Ethereum ETF as well. That hasn't been allocated a ticker yet, or it'll probably be live within the next couple of weeks. So again, you can buy those, you can put them in your TFSA ETF, and then hopefully leave them to appreciate tax-free over time. But I would also recommend actually buying the physical Bitcoin or Ethereum themselves, because although you get exposure to the price increases and decreases through your ETF, you don't actually own the Bitcoin or Ethereum. But there's a saying in crypto: not your keys, not your coins. And what that means is that when you create a wallet, a Bitcoin wallet or an Ethereum wallet, you get given a set of what's called private keys, which demonstrates that you and you alone own that wallet and all its contents. With an ETF, you're really just getting that they hold the wallet, they hold the Bitcoin and the Ethereum. You just have they've just made a promise to you that you get exposure to the movements of the price, and that's really just it, to be honest. So by actually owning Bitcoin or Ethereum yourself, you have the knowledge and security that it is yours. Ultimately, it's your asset. And as much as anything else, it gives you skin in the game to actually go ahead and learn about what it is that you're investing in as well.
Yeah, and then I guess looking at it more from a speculative perspective, when do I buy? Should I start if I want to get involved? Do I just dollar cost average buy now or buy some right now? It's at an all-time high valuation of 60,000 per coin right now. Should I wait for it to fluctuate down and try to buy the dips? Why don't we start with the buy side? What is your opinion?
Um, yeah, DCA is the way to go. Dollar cost average for sure. Unless you are, unless you've got your finger on the market pulse at all times, it's too volatile. Things move too quickly. Too much can affect the price. It's crazy. You have to be in the game pretty much full time to be able to try and even attempt to time the market. And even then, it's probably not the best strategy. So if you're not fully engaged with cryptocurrency, then dollar cost averaging is absolutely the way to go. And then, specifically in terms of when to buy, I would say always. Set aside a certain amount every month that you are willing to invest in cryptocurrency from your paychecks, and then just set it on autopilot. Again, either perpetually topping up whatever your allowance is in your TFSA by buying these Bitcoin or Ethereum ETFs, or going on Coinbase and Kraken and just every single month, a specific day within each month, you just go and buy $500 worth of Bitcoin and Ethereum, and no matter what the market's doing, whether it's up or down, you just keep buying at that set time. And I think that you'll be pretty happy in sort of 3 to 5 years time.
Yeah, and then and that brings us to the next one. When do you sell? Like, if you bought it, let's say 10,000 a coin, and it's now at 60,000 a coin, and let's say there's someone on the call in that space, would you say take some profit off, or would what's your opinion about when's the exit point, or is there ever one?
Um, so one of the many lessons that Bitcoin, cryptocurrencies, specifically Bitcoin, teaches you is to have low time preference. Most people, most investors don't think sufficiently long term. There's the old, Warren Buffett made almost all his money after the age of 60. Generally speaking, a lot of the most successful investors are those which are invested within a company or an asset for very long periods of time. They have an investment thesis and they stick with it. They're not sort of subject to the fluctuations of the market like most people. So in relation to when to sell cryptocurrency, I mean, if you've already invested and you've done well, um, by all means take some profit, pay yourself. But I would advise that you kind of need to have a 3 to 5 year time horizon with cryptocurrency. That tends to perform best. If you've got a short term mindset, you're trying to jump in and out 6 months, even a year, you've got a decent chance of getting burnt. So that would be the advice for those who haven't entered yet. Again, for those who have and you've done well, by all means take some profit. I wouldn't say cash out everything, but again, you have to think that once you've taken your profit, be okay with just leaving it, letting it do its thing. Don't keep watching what's happening. Just check in from time to time and have that lower time preference, longer term, time horizon.
Yeah, no, that's fantastic. And I think you've pretty much answered our last question. If you were new at this, what would you do? And I think your idea of you want to get some exposure using an ETF, but your advice would also be to try to own the coin itself. To summarize it over here, you could do the ETF using the ticker BTCC. And it sounds like in a couple of weeks or months, Ethereum will also come out here in Canada with another ticker. If you were to look into stablecoin, you suggest looking into USDC, which is created by Circle, or USDT, which is created by Tether. Some coins to keep an eye on, some up and coming cryptocurrency spaces to keep an eye on is Aave, AAVE, Compound, Maker, or Alpha Finance. And like this has been incredibly, incredibly educational for me. If
So,
Yep.
so I would also say, like, going back to the last question there about what would I advise to newbies. Um, I would say that you have to read the Bitcoin white paper. It's foundational to the whole space. Once you read it, a few times probably, you'll just have a much greater level of confidence in sort of knowing what you're doing. And that would actually be the first thing to do, more so even than, starting to buy any cryptocurrency. And then once you've read that, by all means, go ahead and get some skin in the game, and that'll motivate you more to actually start learning. And then once you do start learning, there's so many free resources which are great. And then again, if you wanted to get a bit deeper, there are some publications, some research houses which produce excellent research reports, which are relatively expensive, but in my view, very much worth it. So I mean, there really are lots of ways to sort of learn and really get involved.
No, that's incredible. I think right now, if there was a question from anybody on the live call, now would be the time to put it in the chat. And then we'll field your questions closer to the end there. But so if you did have a question, by all means, put it in the chat. But what I want to do is I want to sort of shift gears and talk a little bit about what I would be doing with my clients, and that would be if whether it be cryptocurrency investments, whether it be shifting, I would get some financial organization, get a plan going over here. And then what I do with my clients is I try to discover. I never really like to tell them what to do. I like to discover what it is that they're trying to do, and then figure out a plan around that. And then we could navigate the plan, and then we could implement that plan together. So many people on the call are already my clients. They understand my process, and many people aren't. And one thing I've always said is that you should have someone helping you with the organization of your finances. Why? Because you're probably leaving money on the table, because you don't know everything, and you also don't have the time to investigate everything. So a lot of the times over here, what you want to do is to get some professional help, and that's where I come in. How am I different over here? I'm big into teaching my clients, which is why I give so many client workshops. I'm very, very big into education, especially with my education background in mathematics and economics and finance. A lot of times, people will want to invest on their own. And if you do want to continue to invest on your own, you don't want to hand over any money to another investment advisor, then I do a fee for service. Why? Because what I'm doing is I'm figuring out the problems you want me to solve, acting more like an accountant or a lawyer over here. And of course, we have been talking about cryptocurrency, but we all know that I'm a big real estate guy. If someone was to say, "Hey, I'm going to take some profit off of crypto. What do you think I should do with it?" Right away, I would probably say, "Don't spend it, but reinvest it." That way, you're now diversified. Go back to my original model of not all the money should be in the stock market, but let's get some money moving over here in other asset classes. I, of course, like real estate, but I also like taking opportunities, whether it be in the stock market or in other areas over here. So that's how I'm different. If it makes sense to you and you'd like to reach out, by all means, feel free to connect with me and my team over here. But let's take a look over here. Let's see what we got here. So one question is, what is your opinion on hype cryptos like, is it Dogecoin and its recent rise in value?
Uh, Um, so I suppose it's unfortunate, but yeah, I mean, unfortunately, I didn't have any exposure to Dogecoin after its crazy run. But so the thing about cryptocurrency, and again, this is another resource worth paying attention to, is actually Twitter, and specifically what they call meme coins. So I would actually substitute the word hype for meme. So I mean, I'm not sure, whether anyone's involved in marketing or branding at all, but the power of sort of a meme um, is substantial in cryptocurrency, and you saw it happen with GameStop as well, in the regular financial markets. And so, Elon Musk can be largely responsible for pumping Dogecoin. He'll produce like a funny little cartoon of the Doge dog howling at the moon, and then all these crazy people get all excited and just start buying Dogecoin. And some would argue that Elon Musk himself and even Mark Cuban, who claims to have an interest in Dogecoin, had a sort of influence in increasing the price. But to be honest, I don't know. I mean, it's extremely risky. I mean, again, if you've got your finger on the pulse and you can see what trends are taking place, what memes are starting to gain traction on Twitter or Reddit, then have a go. Put a small amount of money in to speculate. But personally, I don't touch it, and I would also put Ripple, XRP, in a similar kind of bucket to Dogecoin. those are a couple of cryptos which during, this cycle and the previous cycle, most of the time, they're in the garbage price wise, but occasionally they'll sort of pump and they'll go crazy. And some people will make a lot of money, other people will lose a lot of money, but they don't really have any fundamental value. And there's just so many other cryptocurrencies which do, which are worth paying attention to instead. So I mean, in brief, I would just say, I don't pay any attention to it, and I would recommend that others wouldn't either.
Sure. Next question over here, very, very basic question. How would you actually buy a Bitcoin? And of course, a Bitcoin is cost $60,000, so you probably buy only a portion of it. And then the question is the only way to buy a partial Bitcoin to do it through an ETF, or can you actually buy the physical partial Bitcoin? James.
So yeah, I mean, it's very important to state that as expensive as Bitcoin seems, in terms of buying a whole unit of Bitcoin, um, Bitcoin's divisible to 8 decimal places. So you can buy a very, very small amount of Bitcoin, um, such that it's affordable for everybody and anybody. In terms of actually how to do it, I mentioned before, you can go to Coinbase, set up an account with Coinbase, and once you've deposited Canadian dollars from your bank account to Coinbase, they make it pretty easy for you to go ahead and buy, a portion of Bitcoin. And another good thing which Coinbase does is that, they also make it clear that it's not necessary to own a whole Bitcoin. You'll just enter in the amount of Canadian dollars that you want to spend, and they'll tell you how many Bitcoin, or what proportion of a Bitcoin that will get you, and then you just click buy, and then it will be in your Coinbase wallet. And then if you wanted to sort of challenge yourself a little bit more technically, you can go ahead and set up a Kraken account, um, buy your Bitcoin there in the same way that you would with Coinbase, and then you can actually send your Bitcoin to a wallet which you set up yourself. So yeah, I mean, owning it through to an ETF, owning a partial Bitcoin through an ETF is not the only way at all. Like I would actually encourage people to buy a small amount of Bitcoin through either Coinbase or Kraken, as well as buying it through an ETF.
Is there a fee for service charge by doing it in
Of
either of
course,
those platforms?
Coinbase is actually pretty expensive in that respect. One of the reasons why they did so well in their listing last week is because they're just generating obscene amounts of revenue and ultimately profit. And that's because they have, I wouldn't say a monopoly, but I mean, they're probably the most dominant player for new people into crypto because they just make the buying experience so easy. And the flip side of making that buying experience so easily is that they do charge relatively high fees for the buying of various cryptocurrencies. So Kraken are a lot less expensive, but I mean, so you have to go through what's called KYC and AML in order to set up an account, know your customer and anti-money laundering, when you transfer your funds through to either Coinbase or Kraken. So, I mean, they're both the same in that respect, but once you're actually on the platforms, Kraken is more similar to a traditional trading account. So if you have experience with buying and selling stocks in a trading account, Kraken won't be too tricky for you. But if you have no experience in that kind of thing, Coinbase just makes it a lot easier. And again, because they make it so much easier, that's why they are more expensive than Kraken for buying and selling.
What are we talking about here? Like buying and selling a stock on, let's say, Scotia iTrade is probably about $10. And then there's these, low fee or no fee ones. How much is it to make a purchase on either of these?
Well, I mean, in honesty, I haven't used Coinbase for quite a few years, so I don't know what their latest prices are. But again, they don't so much charge neither of them charge a fixed fee. It's a percentage basis. So they'll like, I think Kraken's about 0.25% it charges on a trade. In other words, 0.25% of the trade value. And Coinbase, again, I haven't used it for a few years, but it could be as much as 10 times higher than that. It could be as high as 2.5% of the trade value. But again, I don't know for sure. I haven't used Coinbase in quite a few years, but at least when I used it, it was expensive, and as far as I'm aware, it's still expensive.
Yeah, a couple questions over here are almost linked, and that's, what is more information that people could read up on, literature that you would personally recommend to further the education that for people who want to get in the cryptocurrency space? I know you said to start with the white paper that was from the founder, but how would they find that? Is it just online?
Yeah, so I think one of, I'm just going to check the website whilst I'm talking to make sure I give you the right address, but probably the best resource, certainly for Bitcoin and maybe for cryptocurrencies more generally, is lop.net. That's LOPP.net. I'm just looking at the website now. I mean, it has a bunch of different tabs on the top, one of which is Bitcoin resources. It also has, interviews, presentations, articles on crypto generally. So that's probably kind of like, the crypto or Bitcoin Wikipedia. But more than that, it's better than Wikipedia in many ways. It gives you links and access to everything you could possibly want to learn about, crypto, certainly in relation to buying Bitcoin, learning about how it came to be, et cetera, et cetera. And then there are lots of different newsletters worth subscribing to. In terms of free ones, there's a really good Ethereum and decentralized finance newsletter called Bankless. Um,
Is
and
it
then
is it is it is it bank list, list?
Bankless, like in other words, being bankless,
Oh,
Bankless,
got
Bankless.
it. Got it. Bank less. And then wait a minute. So that there is a online newsletter?
Yeah, you subscribe to it and they'll email you most days. And then what else? So there's a guy, a Bitcoiner called Nick Carter, NIC, and then CARTER, Nick Carter. He runs a fund in Boston, um, but he also is a very prolific writer on Bitcoin. I mean, if you just Google search Nick Carter Bitcoin, he's written numerous Medium posts, Medium articles on Bitcoin generally.
I
Uh,
think he was a big star in a boy band not too long ago as well.
that's his namesake, but they look nothing alike, believe me.
Oh yeah, good, good, good. I was about to invest heavily with him.
And Nick Carter's a good guy. And then again, in terms of actual, stuff you can pay for if you wanted to do that, I would highly recommend um, Delphi Digital. So Delphi is in the Oracle of Delphi, DELPHI. Um, Delphi Research, Delphi Digital are phenomenal. They have a variety of different sort of tiered research packages that you can pick up. They produce regular reports, mostly on decentralized finance, Ethereum. They produce market reports, macro reports. They're unbelievable. But again, you have to pay for it. But yes, start with lot.net. Look at Bankless for the Ethereum and DeFi stuff, and go from there.
Yeah, James, I want to be mindful of our time over here. And again, I want to thank you so much for all of the information. You're one of my incredibly valued clients, and I know we're working together quite a bit on some other projects. But I want to thank everybody for coming out. And I think we've got like all of the goods. We've got places to start. We've got places to research. We've got, links to websites. We've got ETFs, ticker symbols. And we also got step one on how to set up a Coinbase wallet. So, James, I want to thank you for your great knowledge over here. For my clients out there, if you wanted to talk, you always have access to me. We just set up an appointment through assistant at latitude-west.ca. If you're new to myself and you just sort of wanted to talk about my approach and some of the other things that I'm doing, very, very different type of advisor. Just because I'm a little bit more on the true asset allocation out there of how the wealthiest people on the planet have gotten there, and it's usually not the most traditional way with mutual funds. So James, I'm going to leave us there. Thank you very much. And for anyone who likes to reach out, assistant at latitude-west.ca. All right, James, enjoy the rest of your day.
Hi, everybody.
Okay, bye now.